As of right now, Thursday, April 23, 2026, at 10:01 a.m. Eastern Time, BigBear AI Holdings Inc. is trading at $3.90 per share, marking a solid intraday jump of 2.90% from its previous close. This price action follows a morning high of $4.05, and while the broader tech sector is feeling some heat, BBAI seems to be carving out its own path this morning. You might look at a $3.90 price tag and see just another small-cap tech play trying to find its footing, but there is a specific tension building here that most people are completely overlooking. While the general crowd is waiting for the next big quarterly earnings beat to validate the stock, the real story is currently buried in the massive divergence between its shrinking legacy Army contracts and the explosive growth in its new recurring software revenue. The expectation for BigBear AI is that it remains a lumpy, government contract-dependent service provider that struggles with inconsistent margins. Reality, however, is showing a company that is aggressively pivoting toward a high-margin, recurring revenue model through its recent acquisitions, like Ask Sage and CargoSeer. While the headline revenue figures have looked soft recently, dropping from $41 million to roughly $33 million in certain quarters, the underlying shift is where the actual value is hiding. Investors who only look at the top-line number are missing the fact that their new AI products are projected to generate a six-fold increase in annual recurring revenue this year alone. This is a classic case where the broken look of the stock price is actually a byproduct of a fundamental transition that hasn't been priced in by the retail crowd yet. When you look at recent trading volumes, we are seeing a significant amount of institutional repositioning. Entities like Fidelity and Charles Schwab Investment Management have been maintaining or adjusting their stakes in the small-cap space, and BBAI is often a staple in those Fidelity ETFs and broader Schwab Intelligent portfolios. If you are using investing sites to track these movements, you'll notice that while the volume today is around 82,000 shares early on, the 30-day average has been much higher, suggesting that the weak hands are being shaken out before the next major catalyst. For anyone doing online investing, the volatility in BBAI can be a headache, but for those who understand the mission-critical nature of what they do for national security, this $3.90 level represents a fierce battleground between short-term skeptics and long-term believers. BigBear AI is essentially the boots-on-the-ground version of AI. While NVIDIA stock is the hardware powerhouse and Apple stock or Tesla stock represent the consumer and automotive frontiers, BigBear AI operates in the shadows of defense and critical infrastructure. They provide predictive analytics that help the military and border security make decisions in real time. This isn't just about chatbots, it's about identifying threats at a port or optimizing battlefield logistics. Recently, they've even expanded into the commercial world through partnerships with the New England Patriots and the Washington Commanders to drive digital efficiency. It is a strange mix of high-stakes defense and high-profile sports management, but the core tech remains the same, taking messy data and making it actionable. If you are using a Robinhood app or a SoFi trading platform to manage your individual brokerage account, you probably noticed that BBAI has been a bit of a roller coaster. It hit a 52-week high of $9.39 before retreating significantly. That retreat was largely due to the company pulling its EBITDA guidance and reporting lower volumes on certain Army programs. But here's where the expectation versus reality gap widens again. The market interpreted the lack of EBITDA guidance as a sign of trouble. Reality suggests it's a sign of aggressive reinvestment. They are pouring capital into integrating their new acquisitions to ensure that by late 2026, they aren't just a service firm, but a specialized software powerhouse. Institutional activity has remained surprisingly resilient despite the price drop. We see names like Jane Street Group and Goldman Sachs showing up in the filings. These aren't the types of players that stick around for a failing project. They are likely looking at the $135 million to $155 million revenue target for 2026 and realizing that a company with a $1.8 billion market cap is being valued not on what it earned last year, but on its potential to dominate the AI customs management and border security niche. The partnership with AD Ports Group in the UAE is a perfect example of this. They are taking their U.S. defense pedigree and exporting it to global trade hubs, which is a massive untapped market for them. Now, let's get into the mechanics of the business for a second. BigBear AI operates through two primary segments, cyber and engineering and analytics. The analytics side is where the real growth lives. They use a proprietary suite of tools to provide what they call mission-ready AI. This means the software has to work in environments where there is no room for error. Their business model has historically been heavily weighted toward government contracts, which are great for stability but terrible for rapid growth due to the long sales cycles and bureaucratic hurdles. This is why the recent shift toward commercial partnerships and SaaS-style recurring revenue is so important. They are trying to break free from the consultancy label and earn the tech platform multiple. Looking back at their history, the company came public via a SPAC, which immediately puts it in a category that many investors are wary of. Many SPACs from that period have absolutely cratered, and while BBAI has had its share of pain, it has survived where others vanished. They've spent the last year cleaning up their balance sheet, reducing debt, and forcing the conversion of notes to save millions in interest expenses. This financial housekeeping is often boring to the average retail investor using a Fidelity mobile app, but it is the foundation that allows a company to survive a high interest rate environment. They now have record liquidity, which gives them a runway to reach profitability without needing to dilute shareholders further in the near term. I want to pause here for a second and get your take on this. Comment below how many shares of BBAI you currently hold, or if you are waiting for it to dip back toward the $3 level before stepping in. The sentiment around AI small caps is incredibly divided right now, and I'm curious to see where this community stands on the defense-first AI approach versus the broader commercial players. The momentum in the technology sector is currently being driven by the giants, but the real gains often happen in the subsectors that the big money hasn't fully saturated yet. If you are looking for investment help or using a SoFi robo-advisor, these types of volatile, high-growth names might not even show up on your radar because they are considered too risky. However, if you are doing self-investing and managing your own interactive broker's account, you have the flexibility to look at these niche players. The key is to watch the gross margins. Last year, they took a hit, dropping to around 20% because they didn't have the high-margin license deliveries they had in the prior year. If those margins start to creep back toward the 30 or 40% range as the Ask Sage integration completes, the stock could re-rate very quickly. There is also a significant macroeconomic pressure at play here. Government spending on AI is one of the few areas where there is actual bipartisan agreement. Whether the administration is focused on technology-led solutions or border security, BigBear AI sits right in the middle of that Venn diagram. This gives them a level of protection against broader economic downturns that a consumer-facing tech company simply doesn't have. If people stop buying iPhones or Teslas, Apple stock and Tesla stock might feel it, but the Department of Defense is not going to stop spending on national security analytics anytime soon. However, the risk is real. The bears will tell you that the 17% growth projected for 2026 is almost entirely coming from the acquisitions they already made, implying that their organic growth is stagnant. This is the reality that challenges the bullish expectation. If BigBear AI cannot prove that they can grow their original core business while simultaneously integrating these new pieces, the roll-up strategy will fail. They need to show that 1 + 1 = 3, not just 1.5. The market is waiting for evidence of synergy, a word I usually hate, but in this context it means seeing if a legacy army contractor can actually sell high-end AI software to a commercial port in Dubai. For those using Robinhood stock trading or SoFi active investing, the next major date to circle is May 5th, 2026. That is when they report first quarter results. Analysts are expecting an EPS loss of about 7 cents, but as we saw in the previous quarter, the EPS figure can be noisy due to non-cash gains on derivatives or tax benefits from acquisitions. The real number to watch is the revenue guidance for the rest of the year. If they move that $135 million to $155 million range upward even slightly, it will signal that the integration is moving faster than planned. Conversely, if they miss that number, the market will likely punish the stock back down toward its 52-week lows. Institutional activity in BBAI also suggests a certain level of patient capital. Unlike the high-frequency trading often seen with Nvidia stock, the holders of BigBear AI seem to be playing a longer game. We see positions from State Street and Vanguard, which are often tied to index tracking, but the presence of active managers like H.C. Wainwright, who recently maintained a buy rating even while lowering the price target to $6, shows that there is still professional conviction here. A $6 price target from the current $3.90 level represents a massive upside of over 50%. Whether they can hit that depends entirely on execution over the next 2 quarters. If you are just getting started with online investing or looking for the best investing sites, it's important to realize that a company like BigBear AI is not a set-it-and-forget-it type of play. It requires active monitoring of government contract awards and SEC filings. Using a Fidelity brokerage or an interactive brokers platform gives you the tools to set alerts for these types of catalysts. The tension between expectation of failure and reality of a strengthening balance sheet is exactly where the opportunity lies. To wrap this up, let's look at the scenarios for the rest of 2026. In the best-case scenario, BigBear AI successfully integrates Ask Sage, captures the projected $25 million in recurring revenue, and secures a major new contract with a branch of the military that offsets the loss in legacy army volume. In this reality, the stock likely breaks past the $5 resistance and heads toward that $6 analyst target. The worst-case scenario is that the commercial pivot stalls, the UAE partnership doesn't produce immediate revenue, and the company is forced to lean back on its lumpy, low-margin services. In that case, we are looking at a stock that stays stuck in the $2 to $3 range for the foreseeable future. The contrast between expectation and reality here is sharp. The expectation is a struggling SPAC-era defense contractor. The reality is a lean, pivot-ready AI firm with record liquidity and a clear path to high-margin recurring revenue. The market hasn't decided which version of the story it believes yet, which is why the stock is sitting at $3.90 today.
Whether you are trading on the Robinhood AG or managing a complex portfolio through Fidelity Wealth Management, keeping an eye on the transition from services to software will be the most important factor for BBAI in the coming months. We've covered the live price action, the institutional shifts, the pivot in their business model, and the upcoming catalysts that could move the needle. BigBear AI is a complex beast, but the core thesis remains. Watch the margins, not just the headlines. If they can prove the software model works, the current $3.90 price will look like a distant memory. If they can't, it will be a lesson in the dangers of the small-cap AI space. Either way, the depth of this analysis should give you a much clearer picture than the surface-level noise you find on most social media feeds. Expect volatility, but look for the reality in the numbers. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.